Welcome everybody then to IFRS 10, all about control. And the key is, if you control something, it's a subsidiary, so you should consolidate it. So in the exams, you're looking for control. So when you're looking for control, you're looking for three things, basically. Do you have power over the potential sub? And that power means the ability to direct its relevant activities. So the question is, well, what are its relevant activities? Well, its relevant activities are those that significantly affect its returns. So what it does as a business, basically. The second thing you need to look for is, so you need to have power. You need to have exposure or the rights to the variable returns, because that's why that shows it's a subsidiary that you control, because you get the right to the variable returns and exposure to the risks. And finally, the ability to use power to affect those returns. So they're the things that you need to learn. Everything on that screen is all you need to learn. That's basically the knowledge. Now, just some things that in past exams that have come up. You would therefore need to consider within the scenario, you're looking for power, so you're looking for voting rights generally. And obviously, if it's more than 50%, then you've got a subsidiary, but often they make it a bit trickier than that, don't they? So they might include, you've got 45%, and you've got some options that give you voting rights, or some convertible instruments that give you voting rights. They must give you the voting rights now. That's what we mean by substantive. It can't be in the future. Okay, look for any arrangements that give you power or don't give you power. So you might own 45%, and everybody else, the other 55%, are all individual shareholders that will never get together. So you owning your 45% effectively gives you control. Or it could be that you own 45%, but two other people, and they always vote together, so they'll always vote against you. So therefore you don't have power. So just look at those sorts of arrangements that give or take away power. Or be on the lookout for a structured entity. What's a structured entity, you ask? Well, I'm pleased you asked. It's a special purpose vehicle that may lack typical voting rights. So what you're looking for instead, you're looking for cases where control that is the purpose and design of the entity. Was it set up so that it did something for you? Are you involved in the key decisions? And do the rights provide decision-making ability? So you're constantly looking for just, all these standards are set up. They're not set up to test you. They're set up to make common sense that, do you control this entity? If you do control it, it's a subsidiary. If you don't, it's not. And how you go about answering questions, just use the things on the previous slide, or on that slide: power over the investee, exposure or rights to variable returns, the ability to use that power to affect those returns. Use the scenario. If you get stuck, make a guess, and you'll get virtually full marks.